This is Eric Muather with Muather.com for the week of December the 18th, 2011. Let's take a look at what the market did here, the third week of December, which is options expiration week. What we see here is a market that has failed to break out as far as the Dow is concerned. And remember, we said as long as the Dow can't break out above this former break point right here, if the market can close above this level, in other words, can't break out, then you have to look at this market from a point of view of a market that wants to go down. Also notice now that we're in an area in the market where you'd not be surprised to see some kind of sideways action, because we have this breakout point here that the market needs to contend with, and also we have moving averages, so the market can be stuck in this range. We're either gonna be stuck in a range here, either gonna get a breakout, which is bullish, or we're gonna break down below the moving averages, the 10-week moving average, which is gonna be bearish. So the scenario being what it is, I think we're in a season, given the seasonality of the Christmas holidays and end of year holidays and all that around the world, maybe we are going to be range bound. But I think if there's going to be a big move, more than likely we seem to be tending to go down week to week, and probably might have some rallies here and there. Anyway, another way to look at this market is take a look at the Dow Jones from RSI, and you'll notice that the RSI is hit the resistance level right there, and that being the highs on the RSI. So once we hit that level with what seems like a triple top on the RSI, it's not surprising that the market is going to be looking to head lower. Also notice where the RSI is closing out for the week, so any move below 50 might be good for a big down week. If we take a look at the Dow from a daily chart, well, what I wanted to show you here is we have again this, once we had established this trend line here, we broke down here sometime in August, had this big drop. So we've hit this breakpoint level here twice, and we've not been able to move above that. So the market has resistance on the upside now, and it has support on the downside on the 50-day moving average. That's why I say we could be range bound with the possibility of either a breakout or a failure. So we are stuck between this breakout level and this 50-day moving average. We'll see where we trade over the next couple of days and weeks, but unless the market can break out, then we probably see lower prices. I wanted to point out some of the disastrous stocks of 2011. Just the fact that stocks, big household names as far as investing is concerned. Take a look at RIM, was trading at $70 sometime this year, now ending the year close to $13, $14. Amazing drop. I mean, so it's not been one of those years where you'd want to stay long and hold on to some of these bellwether stocks. Take a look at Netflix, had a disastrous move from 300, went as low as $60 in about a couple of months. Just horrible price action. Take a look at Fast Solar. Earlier this year, trading up about 170. Now we see it getting close to $30 here. It's terrible price action. And if you look at Fast Solar, one of the sectors that I've been making sure that my subscribers stayed away from was the solar space. Let's take a look at, once the solar space broke down of this huge wedge here, once we broke down there, this is an area of the market you had to avoid. We've seen this solar stock, solar indexes, solar sector just be absolutely burnt this year. Amazing, terrible price action. If you take a look also at solar now from a month, what is more important here is just the fact that if you take a look at the solar chart, you'll see that it's trading below its March 2009 lows, and if you use that as just a measure of how terrible this sector of the market has performed, sometimes you have to open to the possibility that this could happen to the general market. We'll keep an eye on that one, but here's just an example of another area of the market that has been absolutely terrible performance in 2011. Now, what I'm looking at here is a CRB index, and this thing is coming dangerously to a 52-week low. this week, very close to a 52-week low, trading below the 50-day moving average, way below the 200-day moving average. Now we see the 200-day moving average rolling over. That's never a good sign. But needless to say, what we see here is an area of the market, to me, that is also showing some relative weakness, and it's a huge sector of the market, the commodity space. And if this space is not performing, you have to default to a market that wants to go down, quite frankly. If you take a look at the New York Stock Exchange Composite on a weekly chart, you see first and foremost we have price resistance coming from these top lines here. There's some resistance somewhere around here. All right, we are now moving below the 10-week moving average, so we are stuck in this range here. That's why I say the market could be range bound. We've bounced off this support line here and failed to hold this level, come down. So now we are probably going to be trading in this level here. We haven't broken down here to say that it's bearish, but the fact that it's stuck in a range, to me, I'm going to look to see whether it comes and tests this level here, which has been support on the downside. Now this connects it to the lows of 2009, lows of this year, to a straight line. This has been an area of support. But if you take a look at the RSI now, from the RSI perspective, we seem to be forming a double top on the RSI if you look at the back test of this black line here. So this, to me, short term, on a week-to-week basis, I think is a market that is looking to go down. Now take a look at the networking index, and what you see here is an instrument that, quite frankly, is about to break down to fresh 52-week lows right there. So you see that the commodity index was weak. We also see that the networking index is just about to break down, and earlier this week showed signs of RSI resistance, which might lead to the price breaking down to fresh 52-week lows, because if you take a look at the RSI, you will see that the RSI hit resistance on these top lines here and is now backing off. So there's a lot of weakness in this market in the coming weeks and months if the charts remain the same.